Good morning, everyone. Good to see a few of you on already. Alison, Sean, Rodney, Margaret, Laura. Morning. Hopefully you're all awesome and well after maybe a relaxing weekend, hopefully. Welcome to another Wealth Coffee Chat, team. Good to see you. I'll do a quick few little intros while things are getting warmed up. Jason Witten's my name. Most of you, I think. I can see on the screen here, know that, but if you're brand new, welcome to Wealth Coffee Chat, where we get together Monday to Fridays, around about 8:10, and have a bit of a yarn about the real estate market. I've been property investing over 20 years, coaching property investors across Australia and New Zealand over 18. And along the way, learn a few things, and each day, share one or two little tidbits as we go. A little bit of an echo there. All right, let me just see what's going on here. All right. There we go. The Rode mic was turned on. I had two mic inputs. Graham, hey, thanks for the shout out, mate. That was my special effects, audio special effects. Hopefully that's working. Let me know, Graham, if that as we go. So away you go. Hey, listen, thought we'd talk about some normal and abnormal problems in the property market today, which is an interesting one because, you know, what happens when we're all doing something a little different. Most of you guys know we have this thing called the 1% Club. We talk about the 1% anyway. It's called the 1% Club in our Positive Mentoring program. Means 3 or more investment properties that you own. And when you are doing something like that, you're going from no investment properties to 3 or more investment properties. You become a very small portion of the population, folks. If you didn't already know, anyone listening in, it's a 1%, 1.1%. of the Australian population own more than 3 investment properties. And along the way, we have to deal with a few things, and we need to understand and learn what's normal and abnormal in the marketplace. And today I wanted to maybe have a little chat about what that is, and maybe talk a little bit about the media, but also just information that comes at us as property investors from time to time. And, we need to ascertain, analyze, think through, what's normal and abnormal. So anyone seen a little bit of this rhetoric in the marketplace out there when it comes to the property market now? I mean, the media can only be on the positive for so long, and everyone wants to jump on a bandwagon and talk about something that hasn't occurred and make it a bit more than it is. But tell me in the chat, team, if you haven't already, what else are you seeing in the marketplace when it comes to a bit of rhetoric, a bit of conversation, a bit of, fear-mongering by the marketplace, especially the news peddlers out there in the marketplace. Here we go. It says, hey, home values will likely climb. That's great. Wonderful. Before falling 15 to 25%. Ooh, I find that hard to believe, folks. I find that very hard to believe. But, the information that gets put in newspapers doesn't necessarily have to be accurate or of good quality, does it? At the end of the day, this bit of information is probably being reported by the journalist from someone else, 3rd, 4th, 5th, 20th hand bits of information. So let's talk through this today. Normal, abnormal, okay? This type of media, this type of conversation, unfortunately, is quite normal. This is very normal when it comes to especially the property market in Australia. This type of information going around is quite normal. And I'm going to chuck this sort of down here. As we get some momentum in any marketplace, team, we get a little bit of an upswing. What is normal in the property investment market is we have some sort of peak momentum in the market, and then some of the heat comes out of the market, like a rubber band. What's a better analogy? I'm sort of trying to think one through. But what happens, because markets get momentum and a bit of hype, they actually overshoot often what their yielded value might be, and often that yielded value is paid not by investors, folks, but by owner-occupiers. Okay, so tell me, maybe sit there thinking right now, an uneducated investor maybe, or a property owner, a first home buyer, an upgrader, a principal place of residence, someone who wants a property to live in, tend to pay a little bit more, right? And this is where, if you guys may have seen, the marketplace get a bit feverish, this kind of peak level where the owner-occupiers have come out in droves. Now, there was a few stimulations for that sort of peak part. The government certainly stimulated the building boost in the marketplace. That was great. In the beginning, it kicked things along, but maybe now it's kind of biting people on the bottom when it comes to the marketplace. Quick shout out to those who just jumped on. So James, Melinda, Chris, Graham, I think I gave a shout out before. Is property prices being reported in the media going down at some point a normal or an abnormal problem? Completely normal. Why is it normal? Because we have a bit of FOMO, a bit of momentum, and those things push markets along, and they peak at some point. But, do we have a problem? Do we have to run for the hills? Do we have to hunker down? This is a good question. Will property prices fall 15 to 20%? I don't think so. I think that's rubbish. I think that's complete rubbish. Some might, but those prices that fall that far have probably overpaid by a long shot. But anyway, let's not talk about that. Let's talk about a few things where we find the marketplace right now, and have a look and talk about potential strategies, ideas, concepts when it comes to this marketplace. I'm just going to move this to line up. That might work. Pretty close anyway. So if you think about what's going on in the marketplace right now, property investors, that money and that momentum won't go away. Okay, I'm telling you right now, there is certainly a lot of money in the marketplace that needs to find a home, and real estate is certainly a very attractive piece of investment, a piece of somebody's investment portfolio. Okay, and when we look at the marketplace, where is very good value to buy in real estate? Well, let's have a little look at some of the latest information that we can find. And tonight, folks, if you don't already know, those in mentoring, we've got Dr. Andrew Wilson coming to the mentoring night tonight. So make sure you get a piece of that action for tonight. And we're going to do a big deep dive into the data so we can make the sense of it. But you have a look at the median house price value right now. I haven't pulled up the units, but I'm going to talk about that in a minute. We're going to see that stuff tonight. So, quite significant median house price growth in the last little bit, which has been fantastic over 2 years. If you have a look at this, pretty nice. Now, not off the charts, not insane median house price growth, team. Don't stress about that. Morning, Di. Morning, Fiona. When we look at the market and we say, all right, well, what is normal, abnormal in this sort of space? Well, I can tell you what is starting to present an issue for property investors and many people who are looking to invest into the future. And the number one thing, other than access to funding and finance, will be, what is my rental yield? And if you have a look at this, there is a few places that we need to pay attention to, okay? In the two places we have, Melbourne and Sydney with lower house yields. Now, for me and my money right now, I wouldn't be chasing a house in those locations per se unless I could get a rental yield of 4% or more. What is happening right now in the lending circles, because we do loans every day, the lenders are saying, if you can get a 4 to 4.5% rental yield, that's what we want. Anything under that will start to discount, will start to penalize you in your borrowing ability. So then we need to start thinking about what that might be. If you have a look at the rest of the marketplace, the house yields are better than the other two by a long shot. And some of them, pretty significantly better. What this does, team, when house prices go in this direction, where do you guys think? Tell me two things right now. Give me a little sort of best educated guess right now. Two places that money will flow, because money will keep momentum right now. Let's say in Sydney and Melbourne, in the high price, $2 million houses and stuff like that. Well, maybe someone's not going to pay $2 million anymore if interest rates go up 0.5%. Maybe they pay 1.8. Maybe that's the number. Where or what type of real estate? Yep, you're already taking the question or saying the answer. And what will happen right now, because median house prices are so high, and if interest rates go up a little bit, we will see the attractiveness. Me attempting a very bad Australia again. Put Tassie on the bottom there. We will see, if the house prices are $1 million, then, and an apartment is 700 or less, you will see that type of real estate be attractive to homeowners and investors. The other part with apartments is the yield is higher. The yield is significantly higher, usually 1 to 2% higher than houses, the rental yield. So we're going to see some interesting things, team. We're going to see this. Now, I think property prices will adjust at some point in the future. To me, that's completely irrelevant. It should be irrelevant to you, per se, if you are a long-term investor building a property portfolio. It should be irrelevant, team. But what we need to understand is there a real problem that we need to manage, or is there an opportunity to take advantage of, because they come in often similar packages? Good morning, Michelle. So money will flow from places where it's too expensive to buy to less expensive places to buy. Brisbane, maybe Perth, maybe Adelaide. Some of that money is flowing to Hobart and stuff like that. Hobart doesn't make any sense to me. There's just no economy down there. But anyway, when you think about the marketplace, you think about this stuff. Maybe money flows from here to Melbourne, not for a house, but for a unit, okay? Because you can buy a great unit for $650, $700 with a 4.5% rental yield in the capital city with major rental capacity or major rental pressure coming, okay? So as we hear this rhetoric, team, in the coming months and in the coming maybe year or two, keep these things in mind, right? The marketplace is behaving absolutely 100% normal, okay? Have a look at this little thing for a long time. Okay, let's talk normal. Sydney being the most expensive place in Australia. Well, yes, it's been the most expensive place in Australia, according to this bit of information here, since 1970 and probably beyond. So Sydney being expensive, normal. Normal. Listen up. It's normal. Right. Okay. You know, after a climb in values, is there often, from a growth momentum point of view, an adjustment and maybe sometimes a flat period? Yes. Normal. Right? And maybe that will be normal. Completely and absolutely ebb and flow, breathe and contract, property marketplace. Let's look at this. Let's say you bought at the peak of a market in 2005. Let's say you bought at the peak, okay? And then you're like, oh, this thing's rubbish, okay? So here, this person had to wait maybe 7 or 8 years. Now, this is very blunt, not a very good example, but, 7 or 8 years before their property to then do its thing, okay? So, team, very normal for markets to expand and relax. Sometimes you want to call it contract, whatever, right? Interest rates will go up. So too will rents. And that is normal, okay? That's the normal thing. So just wanted to touch base on that one because I've seen now quite a few articles and some concerns from some of the less informed investors in the marketplace. So just remember, this thing's a marathon, not a sprint. You're going to buy well and you're never going to sell. And the number one point is, in the future, your properties will produce income for you, passive income, weekly, reliable income. And in the meantime, you're going to be exposed to market movements multiple times over the next 15 to 20 years, probably 3 to 4 different versions of this we've just experienced for all sorts of different reasons. It's very normal. It's very understandable. And often, if you listen to the right people, e.g. Andrew Wilson tonight, folks, Dr. Andrew Wilson will be there letting us know about the good facts, the good data, the good information of how we look into the future. Hopefully that makes sense. A little bit sort of waffly and wandery this morning, but I just wanted to sort of say that, we need to just check in on what's normal, what's abnormal, and not over or under react to things in the marketplace. All right, that's it from me. Hey, listen, who's keen on coming along tonight? Let me just quickly check here. I think I've got a little link here. So what I'm going to do is I'm going to chuck in the chat. If you're not in mentoring, I've got a special, very special one time. If you're not in mentoring, folks, I've got a special one-time invite for you, and I've just put it in the chat. Here we go. Very special one-time invite to you tonight to come along and have a listen to Dr. Andrew Wilson, okay? So click on that link and you can register for tonight's webinar. If you're in mentoring, don't do that. Don't click on the link. You've already got the info, folks. You've already got the info. So make sure, I don't know, Facebook just didn't let me post that link. That is very annoying. But anyway, it's in YouTube, folks. Go find the YouTube channel. If you're in mentoring, don't click that link. You've got your normal link. You've got the thing. And in mentoring, you'll get everything. Tonight, folks, this is just a quick invite to Andrew Wilson's section. You won't get all the other special stuff that we do. Anyway, there you go. So, little invite for coming along this morning, and a bit of a thank you to say thank you for being a long-time listener to the Wealth Coffee Chats. All right, that's it from me, folks. Stay well, stay awesome. Remember, this thing's a marathon, not a sprint. We're going to buy well. We're not going to sell. And in the future, we're going to live off our passive income, which will be paid weekly. I love it. All right, that's it. I'm rabbiting on. I'm going. See you, folks. See you tomorrow. Around about 8:10. Adios.